Welcome, everyone, to TechBeat, where leaders learn, innovate, and grow. I am your host, Earl Foote, and founder and CEO of Nexus IT. Nexus IT is a white-glove IT support and cybersecurity services firm based here in northern Utah and servicing a nationwide footprint. I'm joined in studio today by a wonderful guest, Mr. Scott Anderson, who I will introduce formally here in a moment. Before I do that, I do want to make a couple of quick announcements. For all of you that are joining us out there, don't forget the next week on Tuesday, Wednesday, and Thursday is the Silicon Slopes Start Fest and Summit. For the Start Fest on Tuesday, my band will actually be opening that at 10:30 at the Gateway in downtown Salt Lake. If you still need tickets to the summit, go check out Nexus IT's social media channels or mine, where we have some 25% discount tickets available for you. A quick reminder that TechBeat is now available on Spotify, Apple, iHeart, Google, Pandora, and all major podcast platforms. We appreciate your subscription, and it's a great way for you to be able to consume these fantastic episodes with awesome leaders via audio anywhere you're at, the car, the gym, wherever it makes sense for you. We will be taking, assuming we have time, we'll be taking some questions from the audience towards the end of this hour for Scott. And feel free to go ahead and join in, make any comments or questions you'd like on any platform you're joining us from, and we'll get to those towards the end of the hour. All right, to my distinguished guest, the man of the hour, Mr. Scott Anderson. Scott is the president and chief executive officer of Zions Bank. Zions Bank is Utah's oldest financial institution and is the only local bank with a statewide distribution of local branches. Zions Bank operates locations in communities throughout Utah and Idaho. In addition to a wide range of traditional banking services, Zions offers a comprehensive array of investment, mortgage, and insurance services and has a network of loan origination offices for small businesses nationwide. Founded in 1873, this year Zions Bank is celebrating 150 years of serving communities of the Intermountain West. A native of Salt Lake City, Scott Anderson joined Zions Bank in December of 1990. Anderson received a bachelor's degree in philosophy and economics from Columbia University in New York. He also received a master's degree in economics and international studies from Hopkins University in Baltimore, Maryland. Active in community affairs, Scott currently serves on a number of business and nonprofit boards. Scott, welcome to TechBeat.
Well, thank you, Earl. It's great to be here with you. Thanks for this opportunity.
I'm so excited to have you here with me for this hour. First and foremost, congrats to you and Zions Bank on 150 years and you for 25 years at the helm of the institution. Those are massive accomplishments, really significant milestones. I'm sure it's an exciting year around Zions Bank right now.
It really is. And when you think that in October 1st, 1873, as you said, we opened our doors. We were in a one-room building just south of our first South office, which was then the ZCMI building. And from that early pioneer bank, you know, we've now evolved to, we're almost 100 billion, and we have 400 plus branches throughout the Western United States and operations in all 50 states. So it's great to be here, and it's great to celebrate this anniversary.
Yeah, wow, so cool. And I'm glad you're here with us, you know, at Nexus IT in our TechBeat studio. celebrating this momentous occasion with us today. So happy to spend this hour with you and talk a little bit about the evolution of the banking industry and how it's related to technology. We too, actually, as Nexus IT, are actually celebrating our 25th year, in business. Yeah. Thank you. This September, right now, we've been celebrating. In fact, we had our big celebration last Saturday with the entire team and stuff. Yeah.
And you've led this from the beginning. So 25 years, we're sort of have the same tenure at our organization.
Exactly. Yes, that's exactly right. And for about that time period, we've had a mutual friend in common who's been very dear to both of us. That is our accountant and CPA, Joe Reyna. And obviously he served as the VP of your Latin division for a time, didn't he? Right.
He
yes.
Did.
Yeah. Joe's a heck of a guy. Always been a good friend to me and a great business advisor and partner.
And he was a good banker.
Yeah. He continues to be a financial a guru for sure. Yeah. We definitely enjoy his involvement in our organization, and he's helped us become a better organization through his his consulting and all the things that he provides and does for us. So Scott, I'd love to bring leaders onto this show and help other leaders learn from the stories of where we come from and our career journeys and the challenges we've faced. You and I both know that business is rarely easy, and where you have the most growth is in challenge, right? And those challenges can be harrowing to get through at times. But if we can put some ideas out there for younger budding leaders or founders, and help them understand the journey quicker and hack their journey, and find success and lead their teams better. That's my objective here on TechBeat. And I always find that understanding the backstory, the personal backstory behind leaders is really inspiring. It's interesting. And it helps you understand the person that they actually are, not just the title that they have, right? So I'd love to learn more about the background of Scott Anderson. Where did you grow up? What were your formative years like? What interests you in that time period? And ultimately, what kind of led from that into your journey in leadership and banking?
Great. Well, I'm happy to share that with you. I grew up here in Salt Lake City, out by Mount Olympus in the East Mill Creek area. I have 5 brothers and 1 sister, and my siblings all are either doctors or attorneys, and my grandmother would shake her finger at me and say that I was her only grandson that didn't have a degree after his name. And she was very disappointed that I didn't measure up to the family expectations. But I had a great childhood growing up, and I was very close with my cousins. And one of my cousins and I started a business, and our grandfather financed it, and it failed. But we still had to pay back the loan to my grandfather. And I learned early on that I'd rather be a lender than a borrower. That is a lot more fun. And so I've always wanted to get into banking, and I've been interested in finance and economics and what makes business run.
Yeah, fantastic. Ultimately, some college degrees that to back that up, and then leading. You started at Bank of America. Is that accurate?
I did.
Yeah.
I started at Bank of America in their San Francisco office. I started up their small business lending area. I spent 7 years with them in Asia, where I was involved in their tech lending and their merchant banking operations. We were based in Tokyo, not in the Tokyo country, but the Asia division headquarters in Tokyo. And then I came back to San Francisco, and then I was recruited to come here to Zions. And it was great to come home to Salt Lake. It was great to be part of the Zions operation.
It's probably fun in those early years, though, of your career to go experience San Francisco and Asia, and some different cultures, different lifestyles, different environment for working and banking and all that kind of stuff. I'm sure that's led significantly to your just an expansion of your the way you view the world and leadership and business, I'd imagine.
It has, and really what struck me, I mean, while I was in Asia, I helped finance and arrange for some sales of Silicon Valley or silicon chip manufacturing plants that were being discarded in San Francisco, and they were being taken over to China. And I realized that technology is really important, and especially in banking, and that the evolution and the availability of technology has really changed banking over the last 150 years, and that it's literally brought your branch into your pocket, or your purse. And as I've watched this transition, it's this banking, I think, really should be described as an information business, but more than that, as a technology business. And most people wouldn't describe it that way. But I see banking as very creative, and most people wouldn't see it as creative either. They most think it's sort of boring and stuck in the past. But it really is forward thinking.
Fantastic. And I want to dig deeper, a little bit later in the show, kind of into that intersection of technology and business, and just how they've evolved together, right? I think it's quite an interesting journey, that those two business sectors have had, and how technology has, of course, it's evolutionized every industry and business, but it's very, very much evolutionized the banking industry. So I want to dig into that, but let's start. Let's talk a little bit more, to start out a bit with, 50 years in the banking industry, 25 years at the helm of Zions Bank. What's changed in the banking industry in that time? And specifically, starting kind of that conversation about technology, what role has technology started to play, on a day-to-day basis in your operations and the way you interact with your clients?
Well, it's been interesting to see. And as I said earlier, I think the evolution and the availability of technology has really changed the industry. When I went to Tokyo, the Japanese banks were just introducing the ATM. And I'll always remember my wife coming home and saying, can you believe that here's a vending machine that gives you out cash? Who would ever do that? And yet you look at that, and there have been milestones of technology that have really modernized the banking industry and has made it easier and more accessible. But as customer expectations have changed, and as the ability of banks to adopt technology to meet those expectations, one thing I think hasn't changed, and that's the business of banking, and the idea that banking is a local business based on trust. And I think the future is that you have to marry technology with that human touch. And I think if you do, you have an advantage over just the fintech companies that will provide the technology, but not that human touch.
Yeah, that's a very important point. We as humans don't easily trust others with our financial resources, and to put that trust in an institution, to hold and manage and grow, money that belongs to us, trust, and that's the basis of our business as well. Our clients don't trust us with IT and cybersecurity unless they trust us implicitly as people, as a partner, as an institution who is going to have their back, right? So that's interesting, and I think that's it seems in a modern world, in business in general, oftentimes that's forgotten. It's not just in banking, it's not just in technology, but all around, it seems like business in general seems to forget the human element and the element of relationships, in doing day-to-day business.
No, I think that's true. And I think if you look at the banking industry, in the past, people would say, well, how well do you compare and with this bank or that bank or this credit union? But in today's day and age, I think people look at their experience with Apple or with Amazon or with Google or with Starbucks, and they want that same experience with their banks. So we're being compared, how well do we do against the service that Google provides or Amazon provides?
Mm-hmm.
And I think we have to take the technology that's available and meet those expectations. But at the same time, as you said, not forget what we can offer that those fintechs can't, and that's the human touch. And I got an interesting letter from a customer that was complaining about a product that he bought online with one of these companies, and he used his bank card to pay for it. He never got it. He couldn't get through to the business to talk to them and work it out. So he called his bank and said, will you stop the payment? He wanted us to resolve it. But I thought, how interesting, that you can't get through when you want to talk to someone. And I think what's really interesting, if I talk to a lot of younger people, and they say, well, I've never been into a bank branch. I don't know how often you go into a bank branch, but at the surveys show that even the Gen X, they pick a bank where they know there's a branch by them, because if they need something, they want to be able to go in and talk to a person. And on crucial items, on difficult issues, buying a home, setting up a will, executing on a trust, they want to be able to talk to a real person. And so knowing that it's there makes the technology that much more attractive.
Yeah. Brick and mortar locations are still, strong. I see that, with our banking relationships and with Zions, the banks are still full, Sometimes there's even lines because there's enough people that want a human interaction, especially as you said, with more critical transactions. If you're applying for an important loan, at least I would rather have a face-to-face relationship. And I realize, as you mentioned, there are some generational considerations there, right? And things are changing because newer generations are just so used to using technology. But let's talk a little bit about that quickly. Zions definitely has been and continues to be on the forefront. I know you have, a massive new tech center here in Utah. You have technology strategists that, are consistently figuring out how to engage with your clientele, how to build those relationships of trust, but to do so through technology, of course, to manage all of your back end, operations and finances, through technology. It's the way we have to do it these days. But tell us a little bit about how technology has enabled you to connect better with your client, and fill us in a little bit on the tech center and some of your tech initiatives and stuff like that.
Well, I'd be happy to. A year ago, in July of 2022, we opened our new tech center, and it's 400,000 square feet. It's a premium LEED building. It generates 70% of its energy by solar panels.
Wow.
It has the most plugins for electric vehicles of any public or private building in Utah. And in terms of employees, tech employees, Zions is probably the second or third largest tech company in Utah, which I think surprises a lot of people. But I think what it shows is how important technology is. And obviously, technology is used to drive all of our systems, to process your check, to send your wire, to make sure that your loan payment is properly applied to your loan. So all of the operational stuff. But beyond that, there's a huge amount of effort being made to ensure that we have the technology that allows you to bank how you want, when you want, whether it's on your mobile in London, whether it's at midnight, or whether it's in a branch. And what's interesting about technology for banks that I found is that, you know, we started out with like the ATM in Tokyo, and we were the first with an ATM network in Utah. And then you have the wires, and then you have telephone banking, then you have internet banking, then you have mobile banking, then you have AP banking and AI coming into the system. But what's interesting is that customers tend to see all of this technology as additive. It's not like they give up the branch and just say, I'm going to get my cash out of the ATM machine. They use the branch, they use the ATM machine, they use the telephone, and that makes it interesting for the company. You know, usually when you come up with a new technology, it offsets something else. But we use the technology to make the branches more effective and more efficient, to give you the ability to bank where you want, how you want, but yet still it becomes and remains a very personal business. And the bank has strong ties to you and to the community.
Yeah, that's really interesting. You know, that it sounds like, you know, your team understands the data of your client behavior and their sentiment around the relationship between, you know, human interaction and the technology augmentation of that, right?
Yeah.
That's
But
pretty
I'll
cool.
give you an interesting story.
Yeah.
So our chief technology officer years ago looked at how checks were processed. And you'd write a check and you'd give it to your merchant. The merchant would give it to their bank. Their bank would then package it and send it on a plane or some type of carrier to the Federal Reserve Bank, and then they would distribute it back to the bank on which the check was written. And so the float was, you know, 4 or 5 days.
Yeah.
And he said, you know, this is really pretty clunky, and there got to be a better way to do it.
Very inefficient and expensive.
Expensive, exactly. And he came up with a new technology that we called remote deposit. And it allows you to write a check, and we can process the check electronically and never have to send that physical check to the Federal Reserve. And the law at that point said the bank had to get you back that exact check that you wrote. So it would come through the merchant to the bank they deposited in, to our bank that you wrote the check on.
Mm-hmm.
We would stamp it paid, and we would put it in your statement. So you may not even remember those days where you'd get a statement with all of the checks included in it.
Yeah.
And so we developed this technology where all of that could be processed electronically. And we presented it to the Federal Reserve. And we said, you know, this is going to take a change in the law. And we worked with the Clinton administration, and we got the Check 21 Act passed that allowed us to process checks without giving you back that original check, which was the key. But the Fed said, oh, we don't need this technology. And then 9/11 happened. And if you recall, all of the planes were grounded, and they came to us and said, do you still have that technology?
Yeah.
Because otherwise there's no way that we can process checks. They will just sit.
Yeah.
And so they adopted the technology. It's now the Fed uses it, grocery stores use it. You know, and that remote deposit has really made a difference in the industry, but in how we look at processing checks and payments. And that's an example of the technology that's being used that makes it easier for everyone.
Yeah, that's fantastic. What a great advancement. And if I understand, then that was developed by Zions Bank.
It was.
By Zions Bank here in Utah.
Here in Utah.
The innovation came out of Utah for remote deposit that, you know, ultimately was federally accepted by the federal government. That's fantastic. I did not know that. Thanks for sharing that story, Scott. Of course, you know, we as Nexus IT, and now, as, you know, individually as consumers, we've been doing a remote deposit for a long time. You know, I remember, and we still have out there, you know, the scanning machine for paper checks that still come in, to deposit those. Had no idea that was Zions Bank and that had originated here in Utah. Well, thank you for that advancement. It certainly has made things a lot easier. We don't have to go to the bank every day now.
That's right. That's right.
I remember, in the early days, again, 25 years, at Nexus IT, it's probably only been the last 15 that we've done remote deposit. But almost every day or every 2 days, I would have an envelope prepared for me, deposit envelope that would go to the bank with the deposit slip, and I would have to go to the bank, and do the deposit, right? And have to bring back, the printed off receipt for that for accounting, to book back into the system and all that kind of stuff. So certainly, a huge advancement that has benefited all of us operationally. You mentioned earlier the future of banking. Technology has caused, business in general to evolve at a massive pace. And over the last decade, and even over the last 2 or 3 years, even more, COVID, was a significant force multiplier of innovation. What do you see in the future of banking, and what role does technology play in that?
Well, I think as I look at the future of banking, and really I think that future is here with us right now, is that technology will continue to evolve and continue to make banking easier and faster and cheaper. It will help make banking more secure, and it will help prevent a lot of fraud. And it will allow banks to use the information they have securely, but to provide better advice to you on a very personal basis. So it's customized for you and not just a general flyer. In the past, you'd get a statement stuffer, what we call it, inside your statement that would say, do you want a home mortgage? Everyone got the same flyer.
Yeah.
But with technology, we can make you an offer that will be different than my offer based on where you are, where you live, what you have, what you're doing. And it should help everyone. It should give you better advice and better options at better pricing. Because it's customized for your particular needs. And all of that will come about because of the technology that we have that will process it.
Yeah, of course, AI. We'll talk a little bit more, about AI here, but AI will begin to change that, understanding the consumer sentiment and, understanding the specific needs of your specific clients and making sure that you're addressing those. What else do you think, I guess, what role is AI playing for you at Zions Bank right now? And do you see, that changing in the future, and what do you see happening there?
Yeah, AI is so new that we're using it now, but I think the future for it is going to be really interesting. I have to give you a little example. So I have Chat GPT on my phone, and I was traveling, and I thought, I haven't seen my wife for a while. I've been gone a week, and I'm going to just send her a note. And so I went on to Chat, and I said, draft me a love letter I can send to my wife, Jesslyn. And 10 seconds later, here came this, and it was a page long. And it was wonderful. And so I sent it on to her, and I got this text back, and she said, "This is garbage. You didn't write this." And I said, "Well, it's the thought that counts." But I think the future of what AI does is that it will speed up our ability to process, and it will speed up our ability to analyze and synthesize data that will make it more usable for us and for you. And I think it will, in particular, help us identify and almost predict fraud. And you look at cybersecurity issues, you look at fraud issues, they are just rampant, and banks have to lead out on that, and AI will help us do a much better job of that.
Yeah, and I realize, cyber and fraud is just one of the things you manage at the helm of, of Zions Bank. You have the entire organization, that you manage. But that is, I would say, our industry. We're very early adopters of AI. We've been using in cyber. We've been using for 10 or 12 years now AI to detect, to neutralize, and to alert of nefarious activity. And so I would say we were kind of one of those sectors that was at the forefront. Now, neural networks and the beginnings of AI have been around since the 60s and 70s. Of course, ChatGPT, generative AI, brought it to the mainstream audiences, to the forefront of everybody's mind. But applications of AI, have been used in different software packages in different industries for some time, particularly in cyber and fraud. But that is, and I can tell you that's where a lot of innovation and development is going, is to help us combat bad actors, at a much better pace, to get better at predicting, to get better at stopping, to get better at keeping organizations and accounts from being breached. While we're on the kind of the topic of cybersecurity, maybe tell us a little bit about your practices, that you can talk about, but what is Zion's doing, to protect consumer and business assets, from nefarious actors out there?
Well, as I said, our business is really based on trust, and it takes a long time to develop that trust, and the trust can be broken in a few seconds. And one thing that our customers expect is that the information that they provide us with will be secure and safe. And knock on wood, while you've read about some major breaches from the government and hospitals and a number of other businesses, there hasn't been a major breach in the banking industry, because we're heavily regulated, obviously, but when there is a breach and there is a loss, the bank takes it. We don't pass that on, and so we watch that very carefully. And the processing of it is to know who you are, and to know sort of how you use your banking, and through AI and monitoring your account to identify if something appears to be out of sync with how you normally bank. And then we would contact you and say, did you do this, or did you charge this on your account, or this came in from this area and you usually haven't been there. But the real process has to be a partnership with the customer. The customer has to be aware of what's happening on their side. The bank has to track it. We have a whole group that all they do is monitor what's happening and what's coming in and what's going out, and what looks right and what doesn't look right, and where are the things going. And we probably have more people looking at that, trying to prevent fraud than there are in the police force in Salt Lake City and Salt Lake County. So it's a big operation, as you know, because you're doing that every day as well. But it's constantly changing. These crooks, if I can call them that, are really good, and they're really sophisticated. And so we've developed a number of programs. So we have a positive pay, which is if you sign up for it, you let us know the checks you're writing, and we go down and is this check that's coming in for payment what you said you did. But we noticed that people, if they stole your check and they kept everything the same, but they took out the name of your vendor and put in their name, positive pay, wouldn't pick that up.
Sure.
And so we've created a new technology that would match, and you say, here's the checks, here's who I wrote them to. And so this check comes in, is the amount right? Is the check number right? Is it made out to the right person, and does it match? And if it doesn't, it pops out, and then a red flag goes up, and we call and say, is this what you want?
Yeah.
And I think it's that constant partnership with going through and watching everything. And then if a red flag comes up, going immediately to the customer and saying, is everything okay here?
Yeah.
But it's really important on the customer side that they are responsive and they watch. And if they notice something strange on their accounts, that they call the bank, because the sooner they call, the more likely we can recover if something goes to the wrong place.
Yeah, yeah. And we often get brought into those scenarios, where there has been fraudulent activity. Businesses are looking for somebody to do some forensics, uncover the paper trail of what happened, why it happened. And of course, yeah, we've learned, the sooner you can get a hold of a bank,
Yeah.
the more likely it is that the bank can, do something about, about a transaction that wasn't
Yeah.
authorized, whether that's a wire or it's check fraud or whatever
Yeah.
it might be. Cool. So, we could certainly talk about, careers in cyber and what that's, what's happening at Zions Bank there. That's obviously an evolving, exciting area, but maybe let's shift and talk a little bit about earlier this year. We went through a little micro banking crisis. Of course, Silicon Valley Bank, Signature Bank, First Republic Bank becoming insolvent. And those situations, heavily affecting the tech sector. Of course, those banks were heavily invested in the tech sector.
Yeah.
What are your thoughts on that situation, kind of the long-term implications, and what does that maybe mean for tech firms that are looking for capital from banks, now and in the future?
Well, the first thing I would say is that if you look at those banks, Silicon Valley Bank in particular, in funding the tech sector, or First Republic in funding mortgages, they were strong competitors. And Silicon Valley Bank, I really credit with funding a lot of the innovation that happened in America.
Yeah.
And it was sad to see what happened to them. They were a darling of the industry, as was First Republic. But I think when you look at what happened to them, there are a couple of interesting things to realize. One, the bank didn't fail because of loan problems, loan losses. It didn't fail because of that. Their loan portfolio was pretty strong.
That's strong.
Two, it didn't fail because of capital. They had a strong capital base. Three, it failed because some of their depositors decided that they were worried that their deposits were uninsured, and they wanted to pull them out, and they did. With today's technology, they could do that electronically. They could encourage others to do that, and it happened on that Thursday, and they lost between $42 to $46 billion in a matter of hours, and that has never happened before. You had Washington and regulators saying, well, this happened because we under the Trump administration they relaxed the banking laws, and that's not the case. That's not why it happened. But with interest rates going up, the value of securities, and these were government securities, so they weren't fly-by-night securities.
Sure.
The value of the securities, if you were to sell them, goes down. I mean, that's how it works. And you buy these securities to use surplus deposits, but also to balance, if it's in a rising rate environment or a falling rate environment, to balance out your portfolio and your capital. But the real issue was there in the deposit side, and what came out of this is that liquidity is king. And banks all of a sudden said, we got to protect our liquidity. And not only the regulators, but the press said, what's your liquidity, and how much of your deposits are uninsured? Because if they're insured, you have no reason to take them out.
Yeah.
And if they are uninsured, then you have reason for concern. And Silicon Valley Bank, about 95% of their deposits were uninsured. And so if you question the bank, you don't want to leave your deposits in there and then risk the Fed taking it over and losing those deposits or having them not available for a period of time while the FDIC goes in and works through the problems and sells the bank and liquidates the assets. And the one of the impacts of that is that the ability for customers to get loans became more difficult, and the cost of those loans became more expensive because liquidity was king. And I think the real downside of the collapse of Silicon Valley Bank is that the financing of startup companies will be changed forever, I think.
Yeah.
And as you said earlier, where you would finance a startup company that was burning cash, but they had a good sponsor, and the sponsor would make another investment before the cash was depleted. Now it's really, how soon are they going to be cash flow break even? And that's a different mentality. And I think that we're going to have to get used to that new norm, if you will. One of the positive things, though, that I think has come out of that collapse is a lot of the talent bankers that were in Silicon Valley have now gone to other banks. And I think you will see a new form of financing startup companies and tech companies in more banks than just Silicon Valley Bank or Bridge Bank.
You think this is going to cause some innovation in the banking industry?
It will. It won't be the same.
Yeah.
But it will be there. And I do think it will shift more to what's your cash flow plan and how soon are you going to get to a break even point of view?
Yeah. Especially for earlier stage companies that are, working on gaining market share as fast as they can and stuff like that.
Yeah. I think the other interesting thing that came out of this with the rising interest rates is that the venture funds said, our money is no longer as cheap as it was.
Yeah.
And when the money was cheap and it was easy to raise funds, they were put all over, and you'd keep investing in a company thinking, well, it's not working, but there's a chance it will. And now with the money having a higher cost to it, I think venture capitalists are going to be more careful in how they, in what they invest, how long they invest, and they will pull out faster than they did before. And I actually think that's a good idea because it's going to make bring some what I would call stability and rationality to the market.
Yeah.
But what I'm seeing, and it'd be interesting to see what you and other tech companies are saying, but I'm seeing a lot of startup companies that are worried that their sponsor is not going to make another investment. They're not close to cash flow break even, so they're not sustainable on their own, that they are going to other companies and saying, will you acquire me? So if it's in the medical device area, they're going to hospital chains, will you acquire me? Yeah. If they're a fintech, they're going to banks, will you acquire me? Because they're not sure that they're going to get continued funding.
Yeah. And certainly I know specific examples here in Utah and beyond in the past 12 or 18 months that, venture-backed startups that did not get their next round of funding, whether it was from, current sponsors or they sought new sponsors and ultimately, shut their doors, which is, but what is happening, to your point, it's interesting that, this banking incident, has had far-reaching ripple effects and will continue to for a long time, not just in banking, but in venture capital and PE and growth funds. And, everybody's reassessed the way that they, the way that they invest money into business. It's not necessarily in the favor of us founders, But what is happening is it's causing founders to have to go back to fundamental basics of creating solid, robust businesses out the gate, and to build. And maybe that means you have to build slower. Maybe it means that you don't get that $50 or $100 million round, and I mean, Scott, 24 months ago, we were seeing, I know of a valuation on a business doing $1 million in revenue. They got $1 billion valuation, right? And raised like $600 million of capital on $1 million of revenue, right?
Yeah.
That's insane. That's absolutely not sustainable, long term. If you can truly, execute your land grab and dominate 98% of that market or something, and the market size is big enough, and you can do it in a time period that makes sense, it might work out. But it's just forcing everybody to be far more responsible, fiduciarily responsible with how we invest and build businesses. And
that's a really good way to put it. And I think that as you look at the future of funding this area, it's going to be based on if it's a cash burn situation, how strong is the sponsor and how solidly are they behind that, and to ensure that the funds are there prior to the loan coming in, and that the loan is paid off prior to the funds running out. But I think it will also really push, as I said earlier, companies to say, we are going to grow slower. We're going to burn cash less. And I think the playbook of any CFO or CEO has to be, how do we get to cash flow break even faster? And that's a fundamental change, because the idea was, if we can show fast growth, even though we're not profitable, our valuation goes up. And if we're sold or bought, or if we go public, we make more money.
Yeah.
And I think that
put the money on the liquidity event, not on the monthly revenue.
Yeah. And that has changed. I think from a banking point of view, as I said, liquidity is the big issue now, and the granularity of your deposit base, and what percent are insured and are insured, and those that aren't insured, are they broadly based, or are they controlled by one or two groups who could say, I'm going to pull out my money, but I'm going to send text to others saying you pull out your money.
Yeah.
So I think that's an issue. One of the real downsides that worries me, Earl, about all of this is the actions of the regulators going forward, because they tend to look at situations like this and say, what do we do? And I think they're looking at it and saying, we want banks to hold more capital. And if they decide to do that, the cost of borrowing is going to go up, and the availability of lending and getting access to capital is going to go down.
Sure. You're not going to be able to invest your liquid assets and gain interest off of those. So you have to hold it, which means you have to charge more interest. Yeah. It makes total sense.
And so I think, businesses have to be mindful of that, and they have to say, gosh, they have to push back like banks are pushing back and saying, Silicon Valley Bank, First Republic Bank, a Signature Bank, they didn't fail because of lack of capital. So why are you, the regulators, saying banks have to hold more capital?
Yeah.
That's not a good thing for the economy. It's not a good thing for business. And it will have a negative impact on lending in our market. Now, I think a silver lining is that for the Fed is that they'll say, well, that will slow down the economy faster than any interest rate hike will.
Yeah.
But again, that banks shouldn't be used in that way.
You shouldn't be the tool for that. Yeah. It was, I guess, encouraging, however, to see that the FDIC was able to actually make head and tails of this situation, and that everybody was made whole. They were able to liquidate the banks, to find buyers, ultimately to make sure that everybody's deposits were taken care of. Nobody lost cash. It was scary for a lot of businesses.
Well, and it was interesting because what the Fed did, and I applaud their efforts, was out of, it was not what they would normally have done, the FDIC, because usually the FDIC comes in, they close down a bank, they take control of the bank, they make the insured deposits available, the uninsured deposits they hold until they liquidate the bank or sell the bank, and then what's ever left they give back. And so when Silicon Valley Bank was closed on Friday, the concern was what's going to happen to all those companies that needed cash on Monday
payroll, whatever it might be. Yeah.
And if they didn't have the cash, and if they weren't going to get the cash, would they lay off people? Would they go out of business? What would happen? We met during that weekend with the governor and the Silicon Slopes and venture capitalists here in Utah, putting together a plan where we would provide financing to cover salaries for those businesses if they needed it. The American Bankers Association also was meeting with Secretary Yellen saying, you got to do something because this could have a horrible impact on business closing down. And so she came out, as you recall, Sunday afternoon and said, we're going to make all deposits, insured and uninsured, available Monday morning.
Yeah, big move.
And you would have thought that would have resolved the issues. But what it did do, and I think this was an unintended consequence, is that people then said, well, the real key here is which banks are too big to fail. Silicon Valley Bank didn't fit that criteria, but they were made too big to fail. And if your bank was too big to fail, whether your deposits were uninsured or not, it didn't make a difference. And so in a sense, it created two tiers of banking, and that's not good, because it's the regional banks, it's the community banks that really lend to small businesses. And if people are saying, well, they're small enough that the government can let them fail, then if you have uninsured deposits, you don't want to keep them there.
Yeah.
But I think that's all going to work out.
It's been quite an interesting situation to follow, and see how it's just how it's all evolved over time, right? Yeah. Thank you for breaking it down and helping us understand it a lot deeper. Tell us a little bit more, now, that we understand kind of the landscape of capital and financing, particularly in the tech sector, and what's, of course, this ball was already rolling before, the collapse of those banks earlier this year. The market was starting to shift, and there was, there were already headwinds, coming. And in venture capital, we were starting to see things change quite a bit. Term sheets, as you said, they were already changing to be far more, buyer favorable than seller favorable, right?
That's right.
What do you think? Where are we at with capital and financing in tech, and what is the role Zion's playing in that? I guess my question ultimately is, what should tech companies expect when they engage with a traditional bank like Zion's? If they need to finance something, if they're looking for some growth capital, what should they expect, and what does the landscape look like right now?
Well, I would say two things. One, if I were a startup company looking for funding, I would first look at the SBA, the Small Business Administration, because we've been working with the SBA to come out with new products that would be available for startup companies without any operating history, and with minimal reliance on a personal guarantee, and with not an in-depth plan. And the SBA has just come out with that new product. Now it's limited to $150,000. But if you're a startup company, that's a great way to get your money so that you can get that much further out before you go to the venture capitalist, so that you can keep more of the equity.
And you don't have to have revenue.
And you don't have to have
so you
revenue.
can be building an MVP.
Right.
Okay. Wow.
Right.
All right.
So it's brand new. They've never done that before. The second is that when you deal with your venture capital company that you understand where they are, how long are they going to support you, and because that'll make a difference if in your cash burn. But if you look at banks, I think you'll see more banks get into the business because of the talent that has left Silicon Valley Bank and gone to other banks. We have some really good lenders that have their genealogy goes back through Silicon Valley Bank. One of our chief credit administrators has that background. They understand the business, and we are there to lend. And we're lending to B and C in the startup venture area, and we want to make sure that if it's a cash burn, the sponsors are there. We want to see how fast they'll get to cash flow break even, but we're there to provide financing for them.
Yeah. All right. That's important, to note that Zions Bank is working with businesses who are in cash burn situations.
Right.
Yeah. Yeah. And that's typically, I think that most businesses believe that banks are not who they go to when they're growing fast and building fast, and they're in cash burn situations. Like they typically think about angels and VCs, and other options, right? Non-traditional financing, but
if you don't have a plan to get the cash flow break even, and if your sponsors are not that solid, you may want to look at angels and other way to get cash rather than going to the bank. But I'd start out with the SBA, and that will at least get you that much further without giving up equity.
Most scrappy founders can get a long way on $150,000. So that's a pretty good friends and family, around there. So
we like the SBA. We know how to do it. We're one of the largest SBA lenders in the country and in the state, and so we're there to help people get those loans.
Yeah, that's really cool. It's really cool to hear the way you're engaging, with the startup and tech communities in Utah and beyond. Of course, you have business banking practices nationwide, which is really awesome. We're winding down the hour here, Scott. Maybe I just want to kind of finish on leadership words of wisdom. What do you think, if you were to pick out the greatest one or two lessons of your, illustrious, nearly 50-year career, in banking and leadership, and 25 at the helm of Zions Bank, that's no small feat. What do you think is the greatest lesson that you've learned that you would like to impart to other leaders out there?
Well, I think one of the big lessons is that you have to be involved in the community. You have to create value for your customers, but also for your communities. And if you do, like you were saying earlier, it's a win-win that they get better, they create more jobs, they create more companies, the economy gets richer, it thrives, and the bank gets better. So everyone wins. And the ability for the bank to use its balance sheet to come in and help find creative solutions for community issues really makes a difference in that ecosystem in raising everything. And I think any business can have that, play that same role, that if you think more broadly about the broad ecosystem and are we contributing to it, well, makes a lot of sense. And in the end, everyone will benefit and you'll benefit from it. I think the second thing is how important creativity is, and that banking is a heavily regulated business. And we have all sorts of rules and regulations that we have to adhere to. But having said that, if we're not creative, we're going to die.
Yeah.
And I think that's the same for any company. They have to think, am I developing the technology to take me to the next step? Am I looking at things in a new way that will make me more efficient and make me more effective? And so I think creativity is really, really important. And I think the third thing is everyone benefits when we have an inclusive culture and an inclusive economy where everyone has truly an opportunity to thrive. The business does better if you have an inclusive business. The economy is better if you have an inclusive economy. But those are three issues and lessons that I've learned.
Yeah, those are really important. Thank you for sharing those. And those are all I would call near and dear to my heart. Inclusivity, very important. Creative problem solving. I mean, you don't get anywhere, I think, in business and as a leader without honing and developing that skill very well. And I've always really respected the way that Zions Bank shows up for the community. Your institution is always one of the top institutions that is supporting things happening at all sorts of different levels. As you and I sat down in the podcast studio today, you noticed, the music, paraphernalia in here. And, Zions Bank even has supported, just as late as, as recent as a couple of weeks ago, the Park City Songwriter Festival, which a lot of people would say, why is a bank? That doesn't really make sense, to support an artistic venture, So I really have always admired that. And it means a lot because I am a community first type of, builder myself. And as you walked in, I told you, I believe firmly in the philosophy of a rising tide shifts.
Right.
A rising tide lifts all ships.
Yeah.
So I think the more that we engage, the more that we understand that our business and our success only has purpose if we can influence, elevate, and lift others in the process. Then it just creates, it builds the community and the world around us. And ultimately, makes the world better in the end. That's, of course, our hope, right?
That's right.
Scott, I want to thank you for your time. I know you're very busy. I know Zions keeps you, engaged all the time. Thank you so much for taking an hour to come and sit with me here at the TechBeat studio, to share your knowledge, your experience, your leadership with myself, with the audience, with the community. I really appreciate
Earl,
it.
thank you for the invitation. I've really enjoyed it, but thank you what you're doing in the community and what you're doing to keep everyone safe. Yeah. We all appreciate that.
Yeah. Thank you. We enjoy it. It's a lot of fun. Yeah. Scott, thank you, my friend.
Thanks a lot.
Yep. All right. We're going to sign off. Thank you, everybody.
We're all going to hear you open Silicon Valley Slopes seminar.
Yes, there we go.
Your band. And your band's name again is
90 Proof.
90 Proof. Yeah. Okay.
Next Tuesday, 10:30 a.m. at the Gateway.
Okay. Yeah. We'll all be there.
All right. Awesome. Fantastic. Yeah. We'll see y'all.